Buying or selling a California business can look straightforward on paper until the tax issues hidden in the background show up. Hidden liabilities, unreported income, payroll tax exposure, sales tax exposure, or prior income tax filing mistakes. All of these things can destroy a deal overnight. And once the transaction closes, those often hidden risks may become your problem. Hi, I'm David W. Klossing. I'm a dual licensed tax attorney and CPA, and I have over 30 years of experience, and I've also earned a master's degree in taxation. For decades, my firm has helped buyers and sellers navigate high-stakes business transactions where tax exposure could derail everything. When deals fail, it's rarely because of valuation. It's because the tax risks were misunderstood, missed entirely, or discovered way too late. Buying or selling a business is not just a financial transaction. It's a very large tax event. And California adds layers of complexity that many deals never fully account for. Unpaid income taxes, unreported sales tax, employment tax misclassification of workers, unfiled tax returns, employment returns, sales tax returns, aggressive deductions, prior audits that are already in motion that you didn't know anything about. These issues don't disappear just because ownership changed. As a buyer, you can inherit what I call off-balance sheet liabilities for tax that you never caused. Extremely aggressive California tax agencies can pursue successor liability. That means unpaid taxes, penalties, and interest can follow from the business directly into your hand. Asset purchases, stock sales, mergers, each structure carries different tax consequences. Choose the wrong structure, and you may assume risks you never priced into the deal. Make sure you factor into the deal what happens if a federal or state tax audit arises for years you didn't even own the business. What happens? Who owes that? So let's talk about what can come back to haunt you. First of all, sellers face risk too. A sale often triggers scrutiny. Large transactions attract attention from the IRS, the FTD, the CDTFA, and the EDD. If historical tax filings don't align, the sale itself can trigger audits, criminal tax investigations, and any disclosures made during due diligence can expose past mistakes that were never corrected. Many deals rely on accountants alone. Accountants are essential for number crunching, but what they can't do is protect legal communications, and there's no work product privileges. If sensitive tax issues surface and CPA communications are subpoenaed, those protections matter. Without attorney-client privilege, emails, drafts, and analysis can become evidence of willful tax crimes. That's where deals quietly turn dangerous for all parties concerned. Here's the advantages of hiring a dual licensed attorney CPA. When we approach a transaction, we do it differently. We analyze federal, state, civil, and criminal tax risk. We do this before any disclosures are made. We separate tax preparation from legal tax defense strategy. We structure transactions to limit exposure, and we protect sensitive communications under attorney-client privilege. This allows us to identify problems early and resolve them without creating new problems. These are issues we see repeatedly. Unpaid, underreported sales or use tax, misclassified employees or contractors, payroll tax exposure, offshore accounts or unreported income, aggressive deductions without support, missing or late filed tax returns, ongoing or undisclosed audits, or even criminal tax investigations. Any one of these can delay, devalue, or completely kill a transaction. Once a deal is inked, your transactions shrink. After closing, buyers may be locked into tax liability for something they didn't even know about. Sellers lose leverage to resolve issues quietly. Early involvement by our team is the difference between managing risk and reacting and doing damage control after the fact. Here's how we help clients. We conduct tax-focused due diligence. We identify hidden exposure. We structure transactions to reduce risk. We coordinate with deal counsel and accountants. We resolve tax issues before closing the transaction. And we protect communications under privilege. Our role is not to slow deals down. It is to make sure they survive and don't come back to haunt you. And whatever, most importantly, don't trigger civil or criminal tax exposure. So in closing, if you're buying or selling a California business, don't assume tax issues are handled. One missed exposure can undo everything. At the tax law offices of David W. Clausing, our dual licensed tax attorneys and CPAs help protect your deal. We protect your assets, we protect your future. Call 1-800-681-1295 or visit ClausingAssociates.com to schedule a reduced rate initial consultation today. That's Clausing-Associates.com.